Good morning everyone, Richard here and welcome to Friday's Morning Bell. Right guys, as always these sessions will be recorded, available on our YouTube channel at Ninjacators. If you do miss it in the future, want to go have a look at the recording, it's generally available a few minutes after I end the session. Typically going for about 30 minutes, a little bit more, depends if you guys got any questions on that subject. If you do have any questions, please feel free to drop them there in the chat box. I'll be more than happy to answer them. I'm streaming to YouTube as well as our new private Ninjacators room as well. So welcome to everybody today and let's get started. Alright guys, on the economic calendar day, 10 AM EST with a preliminary University of Michigan's consumer sentiment, sorry about that. Now, which I reckon will probably be pretty crappy. Don't know if that's going to have any impact on the markets. Obviously, the CPI numbers that came out Tuesday caused the markets to dump pretty strongly. We're going to look at the ESNQ, crude oil and gold as always today, see if there's any support levels that might buoy up this market a little bit. But if you're pretending, or if you have been attending previous sessions, you might have noticed that I reckon we're probably going to start siding with the bearish alternative count, which I'll be showing you guys right now. So that being said, I think all eyes will be on. Give me 1 second. Yeah. The federal funds rates in the FOMC statement figures on the 21st of September next week. Everyone's expecting a pretty hefty interest rate hike, so that'll be interesting to see what happens with the indices. You know, is this either going to make it or break it for the indices, in my opinion? What I mean by either making it is allowing support stepping in and price shooting back upwards, keeping that bullish alternative scenario that we have alive, although it just doesn't look like, price structurally wise, that, you know, price is going to head back upwards again. But, you know, the markets can do anything and surprise us. Break it, what I mean by that is we see an acceleration to the downside, potentially testing these levels on both the ES and NQ that were set in, when was this? June this year. So what I mean by the alternative count is that we previously thought that the correction ended here in June. We've identified an area where price might bounce higher, which is this little green box here. Price did move back to the upside, but you know, we also identified an area where there might be resistance on the way up. We had a resistance area over here. We had another resistance area up here. Price actually teed that pretty nicely, moved into it, moved strongly to the downside. We thought we were going to have some sort of a corrective move within this sort of area, and that price was potentially then going to move up again, giving us some sort of a 5-wave move or sequence. Now that would have been very bullish in my opinion. We did also say that it is possible that there was some sort of small little 4th wave here with a 5th wave that completed there. But as I said, a small 4th wave and such a minor degree, I didn't really like that too much. And we've got to be careful that the price was supposed to hold here if this was a 4th wave. And it was around the Jackson Hole Symposium when Fed Chair Powell said they're going to raise interest rates for as long as necessary until they curb inflation. That an open price slides through that area and sort of invalidate an area to give us a 5-wave count. So this, in my opinion, really does look like some sort of a potential an A, B with an expanded C wave to the upside. All right, similar moves as to what we've been seeing here. So what I've got, or what I mean by these WX, let me just get rid of that. And maybe some of these as well. Just bear with me one, guys. What I mean by WX wave is that this could potentially have been an A, expanded flat B, and a C wave. And on WXY pattern are basically two ABCs after each other, conjoined by WX axis. And it completes in a Y after your second ABC ended. Now, it doesn't have to move exactly the same way as it did previously, but we also did mention that what worried me about this move to the upside, looked very similar as to this move to the upside, although smaller in size, if you understand what I'm saying. All right. So it's sort of like a repetitive pattern taking place here, unless price obviously finds support and we start seeing one hell of a move back to the upside. It's not impossible to happen, but if we're going to get a similar move that we've seen out of this previous pattern from this area, it could be pretty nasty. Okay, let me just check something there on YouTube. I'm just seeing that it is very delayed. Hopefully that's working okay. Anyway, maybe just a small technical glitch. Let me just get rid of those divergences. Now, where can we potentially see support? Now, previously we identified an area here where we had a confluence of multiple market geometry lines. Firstly, an upward sloping long-term pitchfork using 3 historical anchor points prior to this decline that we've seen. Price pulled into this upper 50% dash median line, and there was some evidence that it's respecting these lines. And quite often, before price reaches a major market geometry line, in this case, if it moved downwards, a major one would be your center median line. If you start seeing evidence of price respecting these lines, you very often to a high degree will see price respect these lower lines, especially your major ones like the center median line again. Price moved right into it, tagged it, and moved straight back to the upside. Now, what I mean by confluence is that it also sloped a pitchfork, and I like using shift pitchforks, especially when I think I'm dealing with a corrective structure, which was the case at this area. I thought we're dealing with a corrective structure, and where this lower red line here, what we call a warning line, sort of not cross 100%, but where they all came together pretty much is where price reversed back to the upside. Now, what's really interesting here is that we've seen a move back up to the low median line, move back up, broke above it, find support again, a little bit of resistance at the center median line, and it reached this up percent 50 dash median line. This is how we actually selected that area, supposedly, that could have, when actually did, act as resistance. You see we have this line crossing upwards from that long-term pitchfork, and this line crossing downwards from the shorter-term pitchforks, I like to call it. Price moved down, nearly reached this low median line, pulled right back into it again. We also had a high volume node and volume profile run about this area. Tagged the center median line and is now extremely close to reaching the lower median line again. What I actually should do is get rid of this so we could see properly what's going on here. That's why I drew in this little box down here. Let's label that quickly, and then you can probably duplicate that on your chart if you so like to do. And you can see previous instances, resistance, break, support, resistance, and it shows resistance, initial resistance. And you can see resistance. Will we now find support at this line again? So that area is now currently under today's time frame, or today's daily candle, around about 3,860 and 3/4, give or take. All right, so just keep that in mind. 3,860, potentially an area where we could see support, but judging by these previous strong declines, price might as well just shoot through there. But in any case, we do get a little bounce from there. It might last until the end of today, potentially into next week, and maybe the markets will just start moving sideways until this interest rate decision comes out next week. By the way, what day is that? On the 21st. So that'll be next week, Wednesday. Okay. So really not much to say. I think the only thing I can see is this support level here. Break through there, and we continuously seeing a strong sell-off like this, then I think there's a really good chance that these lows will be tested over here. That was set in June. And if that happens, then we're potentially still busy with a similar move that we've seen over here, starting here, that could take price way lower, potentially into the end of the year, maybe first quarter of next year. But let's not get too ahead of ourselves. I think that we do have a little bit support at that level, so that'll probably be a level to watch out for today. Again, with market geometry, quite often you can trade against these levels, but also be aware that if you're not familiar of where these levels are, to a lot of people these are invisible lines that they're unaware of. A lot of people, like for example, maybe just short, and they short into an area of market geometry, and you get some sort of reversal against your position. Price extremely close to that level currently. So what was that? But yeah, $9, $8.50 away from that level. So that's a level to watch out for today. So let's see how things goes when the stock market opens. NQ. Right, so on NQ, very similar price structure. Trying to minimize this chart a little bit. We had an upward sloping market geometry line, although price broke above that market geometry lines. If you doubled that up using the three most prominent anchor points to draw this pitchfork prior to this insane strong move to the upside, what I call double up, by the way, you just copy and paste it, move that to the upside, then clear evidence that even the same angles operated, almost support, vibrating around this line, support, slightly overshot the upper median line of that angle, and price came down again. Even on the way down, it acted as resistance again, support, resistance, as price moved all the way down to the downside, and price really, well, not really, nearly came close is the right word to use, to this low median line. But we've had at that stage a, where was it, angled line, using the closing prices from the third anchor point that we used to draw this pitchfork to the upside. Sorry, almost losing my chain of thought here. And what's pretty insane is how price moved into that level, tagged it, and then we got this strong move at the same time that we've seen in the ES. Also here, a shift pitchfork that tracked this move to the downside, and on the NQ, this is such a beautiful example of, you have a pinpoint area where angles, or different angles, using different historical anchor points, different slopes, pitchforks, or sometimes you want to use channels. We're using channels quite a bit in crude oil. We'll be looking at that in just a moment. But anyway, there where everything crossed, strong reaction to the upside. Again, similar thing here, focus on these lines sloping downwards. We had resistance, moved up, support, and it reached here, similar to what it did on the ES, this upper dashed median line over here, and boom, straight down again. Temporary support again at an angle from that same pitchfork. So the question now is, where is the NQ moving to? Is it going to respect this downward sloping pitchfork or this upward sloping angled line? And the answer to that is probably both of them. So on the NQ, support moving into this low median line of this downward sloping pitchfork, currently around about 11,759.5, let's call it 11,760, give or take, which could act as potential support. Lower than that, it might pull right into this line of where this beautiful touch came before the strong move to the upside occurred, which is not too far below the line I've just shown you, around about 11,628.5. Okay. Guys, you got any questions about all of this, then please let me know in the chat there. So not much to say on the NQ either, rather than that those are support lines, especially with price being so close to them. They might actually act as support. If price slices straight through them, you look at the next area of support. But again, same thing on the NQ. Might potentially be in the midst of a much deeper move to the downside. Potentially tests The lows, in this case the lows and NQs, also set in June, and on the NQ at 11,145. Right, next up, let's look at crude oil. Give it a sec to load. Right, crude oil moved to the November contract. If you guys are trading with NinjaTrader's platform, you probably would have automatically got that notice yesterday. Or was it the day before? I think it was 2 days ago already. Any case, on the crude oil side of things, I've been running channels to the upside because they were the only ones I could really use. They worked much better in this scenario than the pitchforks work, sloping to the upside. It's a very visual tool, and obviously a lot of people say there's got a little bit of subjectivity involved with using market geometry, but it's all about seeing the angles and drawing and drawing and drawing until you see what I call an operating angle of a market. And you continuously see price respect support or resistance levels as they move into them. Alright, so I've got these channels, and all I did was I actually copy and paste a low one and attach that to the upside. I used this anchor point when price went negative to this low here in, when was this, December, to this high here in March 2021. And the reason for that is I selected this one because normally you want to go from a low to a low and select a high to set the width of a channel. In this case, the width of a channel, you in most cases want to use the point widest perpendicular to your lower angle, which is this point and not these points here. That being said, if you then run a ray at the same angle as any one of these lines and you attach it to areas where previous little, in this case little highs formed, they quite often also act as resistance areas, like it almost did over there. Support, 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 pull back up to it, broke down. Let's actually focus into that area. And we've been looking at this when we started these sessions on the morning bell side of things. Price could not stay above it for a few times again, and this is what I also mean. They tend to respect different angles. So quite often if you draw these lines on higher time frames, they can work really well as support and resistance for a very, very long period of time, which is exactly what happened here. Price pulled back into it. I think we had a target down here. It was reached. Price actually pulled back into a center median line on a few occasions, like it did over here, and also got rejected. Finally, although it was extremely messy, price broke below these lows that were set in April and in March this year. That was lower projected levels that we had, although we weren't trading crude oil. To be dead honest, we did think that just looking at the pattern and what we think could happen, that was a good sort of area for price to reach. It just did that and reversed back to the upside. Now, when we did our session on Wednesday, price was bumping its head against the lower 50% dash median line, which is this one over here. I have to change this line now because we switched contracts. Let me just disengage the snap mode, which was, I think at that stage, yeah, at round about on this contract month, though, on 87.96 plus minus, and really couldn't close above it, and since moved to the downside again. Because price hasn't reached this lower median line of a pitchfork that's sloping in the direction of this downwards sort of gyrating wishy-washy sort of price action, I still think that there is a possibility that crude can do that, although I've been saying this for quite a long time. When that's going to happen, obviously I can't tell you, especially considering of how messy price action has been. I've been saying this over and over again, probably not a great market to swing trade on the higher time frames, but if you have shorter term strategies, then we had a rejection from that level we mentioned on Wednesday and a move to the downside. So probably a better sort of environment on the crude oil to trade shorter term strategies, in my opinion. In any case, we see a continuation to the downside. Then this low median line currently lies at 78.76, and slightly below that this lower blue line that's sloping upwards. Oh, come on, why did I do that now? let's just get the snap mode back on here again. And let's get it off, because that's not what I wanted to do. What did I say? 78.8-ish, plus minus. We go directly below today's candle, where this low median line is. And directly below today's candle, we have the lower channel line, this blue line sloping upwards around 76.83. And that, I think, could potentially be a very strong support zone. Let's color that green for support. Come on, there we go, make it lime. All right, now, a break above these areas or these lines that acted as a resistance earlier this week. We've had sort of this move already. Maybe we're just seeing a corrective move to the downside. If we have another break above 87.96, I think we got a good chance that price will pull into this angular channel line to the upside. Currently around about 91.55, although that's not above today's price. You know, it might take a while to get there, to create some sort of a zigzag formation. You know, what's really interesting about this entire move to the downside, so you've been seeing these zigzaggy moves all over the show. There's one there. This was probably a little expanded flat that we've seen over here into that center median line. Are we going to see another one to the upside or just continue sliding downwards? No idea. But those are the levels for support and resistance. With this resistance line, again, being a little bit closer to the current price action than the ones to the downside. So I think if we get another proper sell-off today, then there's a good chance that this lower zone can be obtained in crude oil. Right, before we look at gold and conclude today's session, still thinking that we either had an A, B, C that's either complete or still needs to complete within this area, which would be not great, because then we're potentially going to see another move to the upside to challenge these highs. Or this could be some sort of a leading diagonal formation, which I'm starting to side with, but a few things need to happen first. Is that we're potentially seeing, I don't know, some sort of leading very funny diagonal sort of a move lower. Could also be an ending diagonal, which would then be very bullish in that case. So again, very difficult to say on crude oil. If this is a leading diagonal, then I still think at some stage we're going to get a much deeper retracement. And if this is a leading diagonal, we're going to see one hell of a move to the downside. But let's not, or I should not get ahead of myself to say that really. Let's just focus on these short-term support and resistance levels for now. All right, guys, gold. Gold, we've been saying for quite a while, and you're probably sick and tired of me hearing this, is that I'm still thinking that gold is moving lower in some sort of fourth wave correction in the larger scheme of things. Meaning that at some stage I think that we're going to probably exceed these highs that were set in, when was this, 2020, August. Now whenever that's going to happen, really, who knows. This is even more crazy price action wise than crude oil is at the moment. The best idea I could come up with a little while ago was that this wave 3 here, similar to this diagram, is this high here. Complex ABC to the downside, complex ABC to the upside for a B and A, B, and that we're then going to see 5 waves to the downside. We've been following this. We did get that 5 waves that broke these lows. And this entire pattern is what's called an expanded flat. So you have the 3, 3, 5, 3, 3, and a 5. We did get that bounce to the upside, but subsequently, bam, a straight crash down to the downside again. Extremely strong move to the downside. So That begs the questions. If this is a 5-wave decline like C waves typically do, they can extend quite far below the area of where you proposed your A wave is, which is this area here. And it has a little bit extended, but I'm talking much deeper. Potentially towards an extension level of at least 138, 168.6, or even deeper, which could bring crude all the way down here to 1,500 plus minus 19, or even a 1,419 or so. That being said, the minimal target objectives has been reached technically from a technical perspective. That we thought a 5th wave ended here, but now it invalidated that, and crude is again moving lower. Also, all the way down here, respecting these market geometry lines. It's really fascinating to see if you're in this sort of analysis, or you do like this sort of analysis. So we got a question from Riley. Yes, Riley, I do look at point of control. I think I've shown that on Wednesday and on Monday. So I do look at the volume profile for points of control. I've just not shown that today because we're going to run a little bit out of time. I also still want to show you our pure pattern trader bundle that I showed on Wednesday. So Riley, just stick around. I think Monday, as always, and Wednesday we'll jump into the volume profile things. If that is what you mean, obviously, to look for a point of control. But in any case, we got gold moving lower. It has been following the indices lower, and current support pretty much there at this lower red line, 1,659, give or take 1,660. Lower than that, and it breaks continuous lower, then we could potentially reach this lower red warning line again, which is currently under today's candle around about 1,627. Should price bounce, it might find resistance at this lower median line above today's candle. Oh, let me just get that properly. Around about 1,690, give or take. Alright, so guys, that concludes the analysis side of things. If you did attend Wednesday's session, we had a chat about our pure pattern trader bundle that we're offering here at NinjaTraders, or Ninjacators, sorry. And what I've shown you guys was this nice little nifty tool here on the left hand margin of my chart. If you guys are pattern traders, it's an extremely cool tool to help you identify in real time and on any time frame what pattern might be materializing in real time, right? So it looks at various patterns: double tops, double bottoms, triple tops, triple bottoms. We got head and shoulders and inverse head and shoulders, by the way, cup and handles, rectangles, flags. We got ascending, descending triangles, as well as symmetrical triangles. You open up this box and you can actually go change around some of the ratios that it's working with. You can change the colors of these patterns that you might be seeing. And by the way, if you right click on any one of these, you'll see that in red right now, then nothing shows up. If I right click on one of them again, the pattern shows up. Now, if you were to click all of them on, especially let's say you're looking at a 5-minute chart, then there will be patterns all over the show. What's really interesting, and what I forgot to actually show you, although I mentioned this on Wednesday, let me just get that out quickly, is that we do have a market analyzer that will identify these opportunities or these patterns as they are forming in real time on any of the instruments and any time frame. Now what's really cool here is that we had this sort of a double bottomish sort of pattern that materialized actually while I was prepping for today's session, and you'll see that it also throws these lines out. It would say that pattern would be validated. It actually formed, and I could see it was being formed when the market analyzer informed me that a pattern was underway. And then you have a validation level, and it'll also give you a projected area where this pattern might end. What a beautiful sort of how can I say, forecasted projection that it gave there, and price moved right into it, and it subsequently moved down to the downside. So again, guys, this is a indicator bundle, or actually one indicator should I say, that comes with this market analyzer, as well as all these patterns. You know, all these colors are customizable, that, and with a toolbar that you can basically click on, change anything around that you want to. I believe that's what I wanted to show you. You can move it around, you can move, I've got multiple screens, so you can move it to any one of your screens that you want to. As per normal, just add it to your chart as an indicator, and just a really, really cool tool. So any of you guys that might be interested in this tool, we do have a page you can go visit, and what I'll do is pop that into the chat boxes for you guys, and please go check it out. Oh, why is that not pasting now? Come on, there we go. So Will's asking, before I enter today's session, is one of these the ABCD pattern? Are you talking about ratio patterns, Will, or harmonic patterns? There's not, we don't have harmonic patterns on this one. We do, however, have special bundles that only deals with harmonic patterns. I reckon you're probably referring to ABCD patterns, harmonic patterns, right? If I'm correct. Yeah, so we do have a certain indicators or bundle again that only deals with harmonic patterns. So by all means, go visit Ninjacators.com, and you know, you can also sign up to the free indicator of the month. It is available for you to sign up there, and that's for free. You get one indicator free per month. And but we do have pro bundles as well, as a bit more complicated, like this one. I won't say complicated, but a bit more advanced. And like I said, we do have that ABC ratio pattern indicator available there for you guys too. All right, guys, I think that's it for today. Thanks very much for attending. I hope you all have a fantastic rest of your day and a weekend. And as always, I'll be back on Monday, same time. And again, these sessions will be recorded. If you ever miss it, you can go catch it up again on the Ninjacators YouTube page. All right, guys, thanks very much. Take care and goodbye.